What if everything you thought you knew about saving, investing, even surviving in today's economy was already outdated?
What if the numbers said one thing, but your bank account told a different story?
This isn't just about markets breaking records, it's about Americans saving more than ever and still feeling broke.
About side hustles becoming lifelines, about NVIDIA insiders cashing out billions, while 4 in 10 families can't afford a home.
This week we're cracking open the latest financial data, not to bore you with the stats, but to reveal what they mean for your life, your future, your freedom.
You're listening to Plan Life Right, where we help you cut through the noise, take control of your money, and build a future that actually works.
The numbers don't lie, but they don't tell the whole truth either. So let's dive in. Let's kick things off with what may be the most jaw-dropping market rebound in decades. The S&P 500 dropped about 15% in April and May, only to soar back to a new high on June 27th. That took just 89 trading days, the fastest recovery ever from a 15% drawdown, according to the Dow Jones market data.
And that breaks previous records. That kind of V-shaped bounce, that's absurdly rare. For context, after the 2007 2009 crash, it took over 3 years to return to those highs. But here, 3 months.
Yeah, the catalyst here is a mix of easing geopolitical tensions, the Israel Iran ceasefire,
Yeah, that was huge.
a pause on tariffs, the cooling CPI data, a strong earnings season, tech rallying hard. You combine that with a classic golden cross, the 50-day moving average crossing above the 200-day moving average, which has historically been a bullish signal 85% of the time.
But here's the nuance. While mega cap tech led the charge, the Nasdaq 100 was up, 32% since April. Small caps lagged, and value stocks barely budged. So it's not a broad-based surge. It's momentum chasing in pockets, kind of like
Yep,
little mini bubbles. And that matters if you're overweight, concentrated portfolios.
that's right. I need to do some rebalancing. The best way to play it, don't chase the headlines. Look at where the participation is. Are tech and industrial momentum sustainable? Will small caps catch up? We've seen this before. Momentum ends up fading fast if it's broader earnings don't follow. But for now, the technicals are screaming bullish continuation.
Yeah, kind of saw that with the dot-com bubble.
Yeah,
Everybody was buying dot-com stocks, but then they were like, "But you're not making any money."
exactly. What's the
and
burn
they
rate?
and they sold all the stock, and then the whole industry came
That's
crashing down.
right. You got to watch for what's going to go on with these tariffs. So could pull back.
Right. Let's transition from markets to people. We've heard record savings, but what's behind those numbers?
Let's take Vanguard for example. How America Saves 2025 report that just came out. The average employee deferral hit 7.7% of salary 2024. That's a new horizon. Um, then you add employer matches and auto enrollment plans, and the total participant contribution averages was over 12%. That's exactly in line with that 12 to 15% target that we recommend here.
Right. And participation is up too. About 82% are in plans of some type.
Good.
Good ones, bad ones. There's all sorts.
That's right.
It's a spectrum. And auto enrolled groups. That's where most of it is. 94%
Right.
participation in auto enrollment versus 64% in the voluntary plans. That's pretty good momentum.
Yeah, but there's tension here too. You listen to this: 4.8% of participants took hardship withdrawals in 2024. That's up from 3.6% in 23. So what that means, it's almost 1 in 20 people are rating their future for today, meaning for today.
Yeah. plus 4.5% tapped non-hardship loans. That's just debt with interest
Right.
layered on top. And the difference between average balance, roughly 148,000, and the median balance of just 38,000 shows most savers are not stacking wealth.
Yeah, no, it's a tale of two savers: the high balance investor who's on track, and the majority here is scraping by. They're using the retirement as an emergency fund, and when we counsel clients, we aim to prevent this flip. So, step one: cash reserves outside of your retirement plan. That's a must. Step two: use your 401k only for what it's meant for, which is retirement.
We like to drill into your paycheck first. Budgeted emergency fund, income protection, prioritizing high interest debt. Only then do we optimize for contributing more into the retirement long term. That buffer stops withdrawals and preserves compound growth.
We often say savings half the battle. Protecting that savings is the rest because hard earned income, are it, it- because hard earned income compound returns don't rebound from a withdrawal.
Right. I'd say savings probably 30% of it and 70% of it is protecting the nest egg,
Yeah,
right?
right.
So, all right, time to dissect the tech giants. We got Nvidia and we got Apple in the $4 trillion race. We teased this last time, but now we're gonna go deep here.
Yeah, let's start with Nvidia. Insiders have unloaded over 1 billion in stock during the past year, with more than 500 million sold just in June. That includes the CEO, Jensen Hong, and several board members.
Yeah, that's blockbuster. I mean, but it's prearranged trading plan. It's still heavily symbolic, but it happened as the stock hit record levels following a 60% rebound
Yeah.
since April, powered by that AI chip demand. So it seems like they know something we don't. But this was all set in motion
Right.
years or months ago.
Yeah, that's always the disclaimer. Oh, if all the insiders are selling, the CEO and the board,
Yeah,
something's
CEOs
going
unloading
on.
stock, sell, sell, sell. Yeah,
But I don't think it's necessarily it. Nvidia's market cap's now, listen to this, 3.8 trillion.
it's crazy.
They're neck and neck with Apple at 3.9 trillion. So who's going to get the crown? What matters just isn't just the size, it's sustainability.
Right. Yeah, it's like anybody can become rich, but can you stay rich?
That's right. Well, Apple was knocking on it. Everybody thought they're going to hit 4 trillion at the end of 24, and they didn't quite get there. And now you've got Nvidia.
Pretty close
They're
though. Yeah.
pounding at the
Nothing
door.
like a little competition to
That's
push you over
right.
the edge, right? But there's a nuance, insiders might just be locking in gains, but their actions signal that ticker experts sense elevated risk, especially when valuations are stretched for perfection. We use insider moves as one data point, but
Yeah,
not
not
the
the
only one.
right. So meanwhile, Apple, who couldn't quite hit 4 trillion last December, but it's kind of that slower, steadier. Maybe they win the race, as the old saying goes. Nvidia's on a rocket. It's full of potential, but it's also got volatility with it. So if you're carving out some tech exposure, you might split your allocation with steady compounders like Apple,
Mhm.
plus some strategic high growth like Nvidia, but manageable size. So with some clear stop loss rule.
Right.
That's a key there.
Yeah. It's the tail of the tortoise and the hare,
That's right.
you know?
Right.
So just make some soup, half turtle soup, half rabbit soup. All right, next up we have housing. Now, we've talked about moving markets, but how broken is affordability?
Yeah, staggering. In May, the median US home price hit 440,000, meaning the average household must commit 44.6% of the income to the mortgage. So it's way far above the traditional 30% rule.
And only 3 out of the 50 biggest metro areas, Pittsburgh, Detroit, and St. Louis, still fit within that 30% affordability benchmark. But How many people you know are looking to build their dream home in
Yeah,
Detroit, Michigan?
I don't think that's really a retirement area, any one of those 3. You know, everything everywhere else is really, unfortunately deeply unaffordable. For context, this is Los Angeles now needs 104.5% of median income to buy a median home. That's just unbelievable. It's really a wake-up call.
Yeah, absolutely. And, we help clients think location, timing, and purpose. If you're buying, maybe you either need to accept a far leaner budget or shop in markets where, that wage to price balance is in your favor. Or, maybe bypass buying entirely and just rent strategically and invest elsewhere until a move feels smarter. I know somebody who's looking to move their house, but they can't afford the house they want. They got a little bit of cash piled up. They went and invested in a condo on the beach. They're just gonna rent it out, Airbnb, and add to their capital.
Yeah,
So, you can't afford to move, but can you afford to invest? Yeah, of course.
yeah,
Everybody can afford to invest.
yeah. So let's shift gears here. This is I found pretty interesting. The old side hustle, and we're becoming the side hustle nation. So new lending tree data shows that 38 to 44% of Americans now have a side hustle, and 61% of them say life would be unaffordable without it.
Yeah, that's weighty. I mean, these are not babysitting gigs for the next
Right.
door neighbor. They're earning $1,200 a month on average. The median income off a side hustle is $400 a month. That's a true financial lifeline. I mean,
Right.
$100 a week buys groceries for a single person.
Yeah, and it's not just gig workers, it's white collar professionals who are moonlighting too, like lawyers, marketers, designers, tapping platforms like TikTok, Airbnb, and even copywriting and digital consulting are also in this mix.
Yeah. But here's the catch. 65% would rather not hustle.
Right.
It used to come so much easier. They'd prefer one job if they could, no jobs if possible. I
Yeah,
mean, that's
right.
retirement.
Yeah.
It's more of a financial necessity than a passion project like it used to be. It used to just be a hobby that paid for itself.
Right.
Now it's a hobby that's paying to keep the lights on.
Exactly. Our message here is, side income can be a smart buffer, but you got to plan for it. You can't rely on it indefinitely. Use it to build emergency funds and boost income at your day job first. That's the key. And if you're hustling, treat it like a mini business: tax planning, time allocation, growth strategy.
Right. Before we wrap, a few quick and fascinating updates. AI wedding planners
There
are
you go.
now real. Former wedding DJ here. I'm going to let you know. Wedding planners, they command a pretty penny on the market, especially the good ones.
Yeah.
But they may be all out of jobs pretty soon. David's Bridal, probably the
Already.
biggest bridal,
Yeah.
at least in America, is rolling out AI powered touchscreen wedding assistants automating dress, venue, and vendor coordination. You walk into David's Bridal now instead of, Sally coming around the desk to greet you, Mike
Yeah.
walks up and hands you an iPad and leaves.
Yeah.
That's how it is.
I don't know if that's a good thing or a bad thing.
Yeah, I know. It's a good thing for brides and grooms, probably a bad thing for wedding planners.
Yeah. Hey, there you go. There you go.
And in Nebraska, the world's largest time capsule was just opened after 50 years.
How about that?
They pulled out cassette tapes. They pulled out a Chevy Vega model, not even around anymore. I don't even know what that transitioned to. And then Pet Rocks, of all things,
Oh, God,
offering
the
a
Pet
nostalgic
Rock.
lens in 1975.
Wow. These moments remind us that today's headlines, what are they going to be? AI, real estate, side hustles. They're the artifacts now of our time. So what we build and balance now shapes the future, where their descendants will analyze us
Right.
50 years.
Yeah. I was say, remember 50 years ago, everybody had a house and an Airbnb?
Yeah. And they went onto a computer and, they called on a phone.
Yeah.
None of that'll be.
Yeah, they used phones for conversations with their mouths.
Yeah.
Weird.
Nobody talks to anyone anymore. It's all thought provoked. Sent
Exactly.
over
Yeah.
airway.
Neuralink.
Yeah. Neuralink.
So you got to ask yourself, is your plan building in flexibility and protection, not just returns or growth? Because the numbers reflect the markets, but your life reflects your choices.
Yep, you're right.
So we unpack the headlines, but now it's on you. Will you take what you heard and just scroll past, or will you do something about it?
Because here's the truth, the people who win in uncertain times aren't the ones who wait, they're the ones who prepare.
Exactly. And your finances don't need to be perfect, but they do need to be intentional. Um, Protect your savings, build your income, and most importantly,
Plan life right, because life doesn't wait, and neither should your strategy.
if this hits home for you, share it with someone who needs to hear it. Subscribe, leave a review, drop us a comment, and visit planliferight.com to dig deeper with tools, videos, and strategies built for real life.
Thanks for listening, and remember, life happens fast, so plan your life right.